Yo guys, what's going on? Welcome back to another weekly forecast. And I know I ended up missing last week's forecast, but we were busy, couldn't get involved. But we're back now and we're sort of ready to sort of get back into the market. Before we get started, let's have a quick look at the VIP results. Not much really to look at because we had a slow week. We only traded there was only setups mainly on Wednesday and Thursday. And the main thing I wanted to get across is you don't have to trade every single day. I've had a few people join my VIP recently, and they keep asking me when you're sending the signal, or how come you haven't sent the signal yet, or because they're so used to being in groups that constantly send signals every hour or every half an hour. And that's because they're trading all the possible pairs, and you get in trade setups every single hour, but you don't know which one's a good one, and you don't know um, yeah, which one's mainly the good one, or a lot of them you can place every single one of them. Now you don't know how much risk you've got total, because you could be placing 1%, 1%, 1%, 1% across, and if they all ended up losing, you would lose a 5 to 10%, and you would be like, it would take a chunk out of your account basically. So the way we trade, and I know Michael also trades the same, and Tomas as well, we only specifically send out trades that we think are the most probable, right? When doing so, it also matches a specific time we enter. We don't enter randomly. We don't enter randomly. I know myself and Michael, we don't really enter during the US session. We only wait mainly on we don't enter during the Asian session. We normally wait for the London and US session because we know that those times are a lot more volatile, and we're more likely to hit our take profits, and we're more likely to get a move in that direction. Obviously, on certain occasions, they do go to stop loss, but it's a part of the game. And that's a part of our sort of strategy that we have. So just bear in mind that, yes, okay, although we took two gold trades on Wednesday, Thursday, if you just look at the percentage here and just think about, well, if I made almost 3% in that 1 week and I keep that consistent, you tell me how much you can make a month. Write down three times by four, you make 12%. 12% on a 100k account is 12,000. So tell me that that's not enough. People just see small numbers, they want to see the big numbers every week, but you tell me and try and make that consistently. That's where the tough part of it is. We just try and get 2-3 trades correct. Sometimes you only need to trade once a week, but a lot of people have it in that mindset that they need to trade every single day, and that's where they end up making the money and probably losing it by the end of the week, and then they have to then catch up the next week. So that's just a little point I wanted to make, but I think that's pretty much it. You can see that we ended up catching the gold trade, which I'm going to talk about, which is on Wednesday, and then the main drop, which is on Thursday, which actually closed out more earlier than I wanted because I was driving, but I'm still happy with it. I still go forward. Anyway, without further ado, again, I still have a discount on my VIP. The link is right here. There's still about 2 more spots still left open, so please, if you do want to join that VIP for next week, use that link. But without further ado, let's jump straight into the gold analysis and see what was going on. So this week is a very interesting week. If we look at the weekly candle, we can see that we had a move all the way up, taking out the all-time high, and then price came back down and closed bearish, right? You'll be able to see that on the 1 hour time frame, and obviously the 4 hour time frame, but very clearly on the 1 hour time frame. You can see that price opened here on the price opened here on the weekly candle, and this brown line, or like kind of orangey line, is the weekly low, and then price ended up pushing up, creating the high of the week, which is up here, and then price ended up retracing all the way back down to the weekly low to push the weekly low. So I was expecting this. Again, I sent this on the gold channel here. Gold, well, it looks like we could obviously swing that trade for plus 500. Unfortunately, my TP got hit. It wasn't really unfortunate because TP did get hit, but I'm looking for the weekly low to be taken out during US session for a potential bullish setup, right? So I was still expecting price to pull down. I wasn't buying here because obviously price is just falling down. We don't want to buy as price falls down. We're going to look for the next liquidity area, and for me, that was the weekly low. I'm expecting that to just get pushed, and then we potentially could see a bullish setup. Let's have a quick look on what actually happened. because price did push the weekly low, and then we did get like, I think it was like a 60-70 pip move up, but I just wasn't liking that main set because I see that we had such a big drop from um, Asia and London that I doubt we'd end up getting, with no news as well, with price to go all the way back up. Meh, the chances of that were very unlikely, and you can see exactly what happened. Price just consolidated in that same area. So we didn't really get that move. And that's one reason why I stayed away from trading gold on Friday. But if we have a look at how we would have clocked that price was reversing and what sort of price action it gave us, it was very clear that once price took out this all-time high here, right? Here's your all-time high, the prior all-time high. Price pushed above it, came back down towards it. This is the dotted line, obviously. But it was this sort of price action that we ended up getting here, which gave me the idea that a sell position is on the cards here. We'll be able to sell back down to see where price goes. So let me just break this down. And actually, I believe I have a picture on Telegram here, which explained this. I did share it on the free channel. Again, if you guys are not in the free channel, please join, because I share analysis for free. I share setups sometimes for free, and we do post some discounts for the VIP as well. So yeah, be sure to jump in on that. Anyway, let's quickly break this down. So you can see that price action on this is on the 1 hour time frame. We can see that price is currently obviously in an uptrend before this. So you can see that price is now pushing up. It's now created a high here, right? This high was created during Asia session, right? Pricing it then came back down, and then we sort of had a consolidation period during London. This high and this low is still intact, okay? You can see that price then goes up to attack the liquidity at the Asia high first, and then obviously we ended up buying this move and took our profits from here, and then price ended up pushing all the way back down. This is the market telling us that, hey, I'm done with the liquidity above here. It's now time for me to start attacking the liquidity from that I've left over the past few days. Bear in mind that this is Wednesday as well, so this is a day where price can do a midweek reversal. You can get Monday, Tuesday, Wednesday being bullish, and then Thursday, Friday being bearish. That's the sort of approach that I've seen happen quite a lot of times. Look for that when you go forward in your market, to know that, price is very bullish on Monday, Tuesday, and Wednesday. When's the best time to sell? It's usually better to sell towards the end of the week, because you want that price to start reversing and giving it to some sort of retracement, and to start collecting liquidity from the other side now. Obviously, this doesn't happen all the time, but it's more probable that way. So we've got probability on our side that price is likely to reverse now because it's midweek. Then what we ended up seeing during the PM session is that price ended up pushing back down here and just tapping a little into this 1 hour fair value gap. I looked at this and saying that price broke a swing point. The swing point being that you can see that price is just moving up in an uptrend. It's failing to break any prior low. We end up getting a liquidity collection. Price breaks the prior low here. All we're just looking for now is a retracement to continue lower, right? What did we end up getting? You wait. You don't need to start trading a buy from here. You don't need to start selling from here. You just wait till London and US session, and it gives you the indication that price is now pushed up. It's retested. And then what's happened here? Can you see how price is now pushing down? This is telling us that price does not want to push above here, right? Because we've tapped up into this area here. Price is now starting to fall back down. It's creating equal lows on its way down. It's also left imbalance gaps, and that is where we entered our trade. I'm going to go quickly to the actual trade entry, which is right here. You can see that price action was right here. It did tap into this gap and push down, but because of my timing is sort of shifted a little later towards New York session, I knew that, look, price has reacted off this 15-minute gap. It's now left an hour gap here. What has it done? I'm expecting for price to hold on this hour gap and push lower now, because the main move is down. It's given us that confirmation the day before that, right, I'm done. Now it's Thursday. Thursday and Friday I'm expecting to be bearish days. So then what ended up happening? Price tapped into the area. We now say it's activated, and then immediately price started dropping. It's up 50 pips. We take a little bit of partials. Accidentally, I left my take profit here. I believe it was a little higher, and then price ended up tapping me out as I was driving. So I couldn't really extend that take profit. But then you can see exactly what happened where price kept dropping overnight, and then we ended up getting this drop from here all the way down from there because it was Thursday and Friday, and price during overnight Asia session just continued falling. That so you could have swing that trade to at least plus 500, 600 pips, and it's all because of this price action here. You can see that price pushed up again, broke, so it's collected liquidity. This has now become a breaker block. If you guys trade that, and that's also what I was looking at as well. So I can go back here and mark the breaker block right here. Here's one. You can drag that across, and you can see that price tapped into this breaker right here. And this is on the 1 hour time frame. You can see that price pushed a high, low, higher high, lower low, came back into the breaker, did the same thing on a smaller time frame. So you can see that you have I'm going to draw this out. This is some valuable information. So if you guys are struggling to find your setup, this is it here. You can see that you have a high, low, higher high, and price is low. So now this becomes the breaker block here. And look how price retested into this area and failed to push higher. So you break it down step by step. You can see that you have an hour time frame. You then drop down and have a look at what's going on in the other time frames. If we now go into the hour time frame and look at where the entry was, you could see that we have a 1 hour fair value gap into this gap here. What did price do? Did it close outside? No. It rejected inside here, and then that's when the turnaround started happening. That's where the take profit got hit right here. And then what did price keep doing? It just kept falling. And then because there's no major like order block, or like there's a little bit of imbalances out here, the key level for me was the weekly low, because we just saw that price is heading straight there. That is a key level here, weekly low, because that is the low of the week, the prior low of the week, where all the stop losses would be on these buys. Where's my pen? So as price is going up, stop losses will either be between every single low, right? And what did price do? On that one sweep, it took out all of these lows, right? So all of the buyers are now taken out of the market. It's now taken out the weekly low as well. So now these stop losses are now taken out, which now sort of concludes that swing of a trade that you can have even like held over 2 days. But that's all you need. You just needed that one nice trade, and look at that, just cleaned up that move. So that's the little breakdown on gold. I hope it was very valuable and you learned something from it. And we're going to go and switch over to US30 and give you guys a similar sort of introduction to the way US30 ended up turning around. This similar sort of thing happened in US30 where price did take out the all-time high at the end of last week. So there's your all-time high at the end of last week. Price is now pushed above it, and it's now basically in territory that it's never been before. So you don't have structure to look at from the left, so it makes it even more dangerous. You can now see that price continues pushing up here at every New York session. So I'm going to mark the New York sessions. So you have a New York session here, right there. Once price opened, it basically skyrocketed up. Price did not retrace or did not do anything. The next US session right here, price did pull back. We were expecting a bullish move up, but right on US session, price just fired straight up towards the upside. So we had another impulsive move without sort of any retests or retraces to get us in. Price did retrace here, and then you got to get on towards the PM session, but price continued pushing up here. And then same thing again, we have Asia liquidity here. Price retraces during London, and then we have a big impulse move at New York. But what ended up happening? Straight after that hour candle closed, the next hour candle basically pushed all the way back down, and this was the start of the bearish move. Now, the reason why this has happened is, remember when I said that at the start of the week, you have Monday, Tuesday, Wednesday, and then you usually get a midweek reversal on Thursday, Friday. Let's have a look at what day this reversal happened. If you look at the bottom, this was on Thursday. Okay, so the fact that price action is now showing very bullish over Monday, Tuesday, Wednesday, it certainly can keep climbing up, but you now entered a more probable area where price is likely to reverse and retrace this whole bullish move that you can see here. So all of these lows are now becoming liquidity areas for price to start attacking. Yeah. So because we ended up getting this price action and then price ended up taking out the Asia high first. All right, I'm going to delete all these drawings. Give me a sec. So it's cleaner. Now that price has taken out the Asia liquidity here, price has a very high chance that it's likely to reverse. The reason for that is it's a very high in the day. It's above the midnight open as well. So the midnight open is around about here. So it's very high in the day. So this is the most optimal position to buy basically because it's taken out the Asia high. It's pushed that high a bit. It's now currently, obviously the daily candle is currently looking like this, right? So you got something like this. It's green, obviously because it's bullish. It's actually green like this. Yeah. And let's say that the wick, there is still a wick on this as well. And the wick would look something like this at the moment. So currently this is what the candle looks like when price is up here, right? So you'd want to really sell at the top of the candle, right? At the top of the daily candle, because when price starts to reverse back down, what does it do when you entered up here? You would be in a sniper position entry where price is right at the top and you're technically entered on the daily candle wick. So this is how the daily candle will look if price starts pushing all the way down. Once price got below the low of this wick here, what has happened now? If you just move this down, it would start looking something like this, and then this turns to red. Just basically, if you guys haven't really had this sort of talk about how the daily kind of moves as price, this is something to start looking into, because then you can see that, right, your job as day traders is to anticipate what will happen, what will likely happen during the day, right? It's going to go up during London, it's going to go down during New York, so that's going to be the main impulse of the daily candle. So that's what we're aiming to do here. So because we're anticipating a sell position here, price ended up basically annihilating these lows here. Could we have possibly got entry? Yes, looking back at it, obviously hindsight, price was obviously pushing down here on Thursday. We were focusing on the gold position here, but you can see that once price broke this prior low here, this is a high, higher high, and it becomes a breaker block. Once price breaks below, it's also at the daily open. It's also being held below the midnight open as well. So there's a lot of resistance in this move here. It's now Thursday as well. You could have placed your sell at the daily open to hold it down as support, or even got a 1 minute entry to see if you can make the risk smaller and possibly place the SL above this high or within this gap, just in case, if you wanted to, because you wanted to see a clean move down, and then price basically just completely fell off the map and continue going down. So that's my sort of little breakdown on US30. It matters about the days, and it's something that I have picked up this week. I was like, okay, yeah, this is very interesting, because how often, although US30 does break the all-time high, but it takes a while to go and break the all-time highs. So this could be a whole retracement back down, and it could do another charge to break the all-time high again. The similar sort of approach that's happened every time it has done that. So this is the same thing. So price has broken the all-time high. When is it likely to reverse? You then look at your days. You see Monday, Tuesday, Wednesday has been absolute bullish days. We can go and look at the daily candles for that. You can see Monday, which is this candle here where my cursor is. Tuesday, another bullish day. Wednesday, another bullish day. And then what happens on Thursday? Because it's that midweek part, it's after Wednesday you want to start looking for sales. It's your best possible scenario. So once Asia got taken out and you start seeing price start pushing down, now is your best time to attempt to sell. So you don't want to start selling on the way up here, because it's still Monday, Tuesday, Wednesday. It's still that first 3 days of the week. Give it that patience. Wait for that fourth day of the week, or even wait till Wednesday to give you that setup. Technically, Wednesday was used as liquidity for the day after, because you can see that we have Wednesday here, price push down, and all of this move was all liquidity just to be taken out from the day after. And then what did price do on Thursday? Take out Wednesday. So the high got taken, the low got taken. That's basically what Wednesday was for. So it's set up for Thursday. Similar sort of thing going back to gold before we give the weekly forecast. I know I'm dragging it on here, but this is all valuable information. So you guys can skip if you need to, but if you're still here listening, Yo, props to you guys, man. Monday, Tuesday, Wednesday. Wednesday was the bearish candle. What happened on Thursday? The retest into the breaker and then the drop. So Thursday and Friday was the main move down, but Wednesday is mainly used as that pinnacle to start turning around. And this is only used in a scenario where price is obviously attacking a previous liquidity level, like the all-time high. And now, when is it time to look for sells? Because price is flying. If price keeps flying and you keep selling on the way up, you're going to get rinsed. If you started selling here, where's price going? Oh, it's going up, it's not stopping. Oh, I don't know what to do. But that's because, remember the days, right? You want to start looking for, if this the same thing applies in the bearish scenario, right? If price is pushing down really hard, right, you look for the mid part of the week. If Monday, Tuesday, Wednesday is bearish, you look for the mid part to give you that retracement back up, and that's where you look to buy. The same thing obviously is bullish. Monday, Tuesday, Wednesday is bullish. The same part, you just look for the Thursday, Friday to look for bearish action. And this was shown both on gold and on US30. So this thing technically works on a lot of markets. But I believe that's pretty much what we have for you today. In terms of obviously a breakdown. Now it's time to get into the weekly forecast. I've got a quick example right here of what I was explaining. I was just quickly trying to look for it live. You can see that in this scenario here, we've obviously entered a sort of bearish move from this drop here, Tuesday, Wednesday, and Friday, and then price obviously starts retracing. We have this candle here, this green one. That's Monday. The Tuesday was a sort of liquidity collection candle where price obviously traded bearish, but then because it's still the start of the week, we're still expecting bullish price action. Yeah, so we have Monday, Tuesday, Wednesday, and Thursday was that final fake out manipulation day before the NFP drop, and I believe this was NFP. If I just check, and yes, it was NFP. So Thursday was that extra manipulation day, and then Friday was that whole one bearish sweep to push price back down into that bearish daily candle. So you can see the similar sort of thing happened here with Monday, Tuesday, Wednesday, and Thursday. Obviously, albeit because it's NFP, they knew that they had the volume on Friday, on that one day, to do that whole move, so they didn't care about Thursday. Normally, if they don't have the volume, they'll start moving the market down on Thursday and then continue it on Friday. So you can see here Monday, Tuesday, Wednesday, Thursday into the level. Now it's Friday. Now it's time to start dumping the market because it's that key day. We have NFP as well. Also helps with the volume, and then price have basically pushed all the way back down where it needed to go and take out all of these lows. So anyway, sorry. Hope that makes sense. If that all that stuff started making sense, please leave a comment in. Leave a message in the comments explaining how you understood it. If it was too quick, let me know, and it'll be something that I could explain in another video or in like a post I can share on the channel. But without further ado, we'll just jump straight into the weekly forecast now and just see what we're expecting on gold. Let's delete these drawings and analyze this stuff live. So we can see that the weekly low has now been pushed. So the week has now ended like this. Looking at the daily time frame here, we can see that we have a potential order block that is right here, and that price is now starting to trade into. Within that order block, we have a daily fair value gap, which has not been touched yet. So I'm expecting price to push into that at the start of the week. Where is my daily fair value gap? Right there. So price is now giving us a retracement to then see potential bullish opportunities during the week. So I'm expecting the start of the week, and this is why I always say in all my forecasts, if you guys have always watched this forecast, I've always said at the start of the week I'm expecting bearish for then a midweek reversal. It's always been in my mindset to be the same thing. I've just decided to explain it now because I've seen it in price action, that for Monday, Tuesday, Wednesday we're expecting bearish price action to then see a bullish reversal. But remember, this also matters on the news events that we also have as well, because if we have a news event on Tuesday, we could get that reversal starting on Tuesday. So it's not clean every single week, but it's something to look at. This is on the 25th. We have GDP, which is on the Thursday. So remember when I was saying about that midweek reversal coming on Wednesday, Thursday? Because we have now news on Thursday, we could potentially get that bullish move on Thursday to start giving us that retracement. However, if price starts pulling up at the start of the week and we get Monday, Tuesday, Wednesday, a bullish move, then you're expecting for that bearish move, and it makes trading a lot more simpler because you're not stressing on when to buy and sell. You've got that in your mindset, knowing that I'm waiting for that midweek reversal. So we have these liquidity levels here that we are watching. We want to see where price starts heading, because price could take out these lows here. We have equal lows at 23.50, which is held for a very long time. You can see for that Monday, we had Thursday, Friday, Monday, Tuesday, price failed to break below 23.50, and that's what held price up as it started to attack this all-time high. So now are we going to see a retracement until here to hold on this order block for a continuation? Do I have an order block template? I'm sure I should. Why did I remove it? No, I don't. Okay, so you can see that I'm going to expect to see what price does within this area on the start of the week. If it starts holding and messing around here on Monday, Tuesday, Wednesday, we could potentially see a Thursday push back up, Thursday, Friday, to start cleaning that. So that's my analysis going into next week for gold. I'm expecting for a bullish move. Looking at the weekly candle, a bullish move to just clean up Thursday, Friday's move and to continue this bullish price action. Remember, we are still bullish. Why? Because price has now taken out another high. It's moving in a uptrend. People seem to miss and forget the fact that the trend is your friend. It's the most basic thing you've learned on trading. So expecting for price to drop into this area. It can also drop into this area, but as long as it doesn't break any of these lows, gold will still be bullish. If price starts coming back down to here, well, then the bias changes, doesn't it? And the price is expecting it to drop lower. So let's see what goes on with that. That's gold. Let's go on to the US30 and have a look. Now, US30 is now trading back towards the all-time high. We have a very key liquidity area here on US30, which I mentioned to the VIPs, that once the week opened on the 15th of July, 14th of July, on Sunday, obviously, we have left a liquidity void, which is right in here. So where that candle closed on Friday and where that candle opened on Sunday, this is all a gap. So this is a very key area, and I'm going to write a volume void because it should be a new week opening gap, to be honest. Do I have an NWOG template? I'm sure I did. NWOG. So this is your new week opening gap. If I drop to the 15-minute, you will see it more significantly. Right there. That's where the candle closed on the bearish right there. Look where the candle opened. Right there. Although price has traded into 50% of this NWOG, and you can see that price ended up pushing up, and this is what ICT trades, that 50% is key. We still have the gap below 50%, and price will likely start attacking that level first. So, oops, I may have clicked an advert. Oops. Alt there. So that is going to be my first expectation going into the start of the week. I'm expecting for price to push down here, tap into this, and then give us that sort of change of structure where price wants to continue back up. We're looking for key levels where price can reverse. We have let's have a look at the daily time frame. That's where the gap is. It's also a daily fair value gap as well. So this could hold as support here. It also is a retest of the all-time high as well. So right here, so we're retesting a key. This potentially could be a very high time frame order block. You can see that price retraced back down, and then price exploded back out. So this could be a very higher time frame order block, but we'll see how it goes. So I'm expecting for price to hold on this area here. And if we start getting that bullish price action on the daily time frame, where we start seeing London trade down, I'm expecting to that New York to distribute towards the upside. So expecting for London to trade down and then a New York to explode towards the upside, and that's what you tend to see on US30. So that's my analysis going in. We're still going to keep bullish, see how this daily fair value gap holds. If anything changes, I will keep you guys updated. But that is pretty much it from this very, very informative weekly forecast / breakdown. If you enjoyed, don't forget to like, don't forget to subscribe. Links are all in the description. This has been Always FX. Peace out.